Hello, I wanted to share the investment lab suite and our educational content and our entire end to end course program that we've created. I'm really proud of everything that's here and really genuinely hope that you all find it helpful. We really do believe in being able to help educate and empower everyone to make more educated decisions in terms of how to deploy capital, how to evaluate assets, how to look at companies themselves, and being able to look at undervaluation, overvaluation. And I think it would be really fun if you went through this. So, we have multiple learning paths and we'll go through that. But really, the investment lab suite as it stands today are multiple tools across different categories that it's like a mini MBA. And there's an entire section on risk and return. So if I want to look at risk and return statistics, correlation matrices, risk decompositions, I'm able to literally click risk and return statistics, and it'll take you right to this page. And it walks you through the theory and part of the application as well around each of these critical principles. So you're looking at probabilistic scenarios, historical returns, and then if you want to be able to understand it better, you just click this large how it works button. So when you click the how it works button here on the top right, it's showing you what is the expected math that is important for you to understand for each principle. But ultimately, you just need to understand that an expected return, as an example, is a probability weighted average of all possible outcomes, right? And then it walks you through actual working and functional examples with real numbers. And it's telling you, three potential scenarios for next year. You have like a boom, normal, or a bust, or a recessionary period. And then it's telling you the probability that you're assigning could be 30% to a boom with a plus 20% return, or the probability of it being new normal or neutral conditions would be at around 50%, or recessionary, let's say you assign that 20%. That ultimately all rolls up to 100%, of course, like in terms of an expected probability outcome. But this is very helpful, right? Because this allows you to add different scenarios as you want, and then you can simulate them, and you can understand, okay, like this is how it works. If I want to understand a correlation matrix, this tells you, okay, it's using a system that is called pairwise by Pearson, and it's allowing you to be able to look at the probability or the correlation between these returns or these assets. And here we have them as categories. So the correlation between technology and healthcare and financials, et cetera. And it's showing you it into a matrix. And if you want to understand it better, you just hover over these informational buttons. And it literally is like a compact, master's level course in terms of finance and valuation and accounting. And again, the same exact concept. You just click the how it works button and it walks you through it. And I really hope that you do find this helpful, because just even like the risk decomposition is so incredibly helpful. Like just being able to know, okay, when I look at the entire space of risk, right, quantitative risk, how do I decompose that risk, right? And what's the difference between systematic risk and idiosyncratic risk, right? And then you can hover over it, and you say, okay, like here is what the probability or the percentage that I'm assigning to idiosyncratic risk versus systematic risk, and what is the difference between them, right? So, and like at a very basic level, systematic risk is essentially any risk that you can't methodically diversify away. So that's systemic risk or market risk that you have absolutely no sway or control over. And then idiosyncratic risk are specific to the assets or the asset class that you're trying to deploy capital to, right? So obviously, I could spend hours speaking about this, but this gives you a good fundamental understanding of how to understand and evaluate risk when you're making decisions, right? And really, this is just like one example, right? So if you go back to the main investment lab suite itself, you'll see again 5 categories, 12 tools as of today. The capital asset pricing model, which is extremely important, and then the security market line. So this security market line is interesting because it tells you when you look at the overall top 30 assets and you look at measured by beta, which is the level of risk, right, for this particular asset group against return as a y-axis, it tells you, for example, Meta is a bit higher risk, but then there's also potentially an attractive return in exchange for that type of increased risk, right? And your overall standard line, your slope, as you would consider it as some type of market premium, is here in a light bluish Tiffany blue here, right? And you can see the assets above the line, which are the ones that are worth potentially deploying some capital to and having some risk and some exposure to. And then you have the ones that are underperforming the security market line, right? So that is like very helpful in itself, and you can get into a lot more granular detail over which assets are considered overpriced, which are the ones below the security market line, and which ones are considered underpriced, which are the ones above the security market line. So there's so much you can do with this investment lab suite. Same thing with the capital asset pricing model, which is the bedrock of financial valuations. And there's the Black-Scholes form. There's so much that you could do in terms of valuations. But really, at a high level, it gives you what the slope is, what the standard is, the T-stat is. I mean, there's so many useful metrics here that will help you learn what the best way of evaluating assets are. And then if you just click Learning Path, you can say, I want to take Investment Management 101, or I want to take Fixed Income Essentials, or Equity Valuation. I want to do behavioral finance is something that I'm particularly interested in. I've mentioned that many times. And then a quantitative portfolio construction. So this is more advanced, but if you click it, it tells you step by step which areas you want to get to and which areas you want to have some exposure to. So, you just start it and track it, and it's entirely for free. So this is one massive educational source. Another massive educational source is if you click the trading course, you'll see that we have an entire trading and investing course where you navigate on-chain, off-chain, bridging assets across different blockchains, how to evaluate assets using formal technical analysis methods. So the way that I like to do it is I have technical analysis, and then I have fundamental analysis, then I have sentimental analysis. And the three together are where you're able to determine whether or not a market sector, or an asset is overvalued or undervalued. And I tend to go long on the ones that are undervalued and tend to go short on the ones that are overvalued. And hopefully that perspective makes sense. And then there's an entire section on being able to generate passive yield and any kind of sustained income from mining, liquidity providing, restaking, etc. So there's a lot here in the course. But I think the Investment Lab Suite is a very good way that you can just jump in, and you could just browse the labs. You can go through them. You could, like, if I want to understand asset allocation, there's a nice questionnaire that will then help you guide how to be able to manage your portfolio and how to hedge your bet, hedge your risk, etc. So hopefully you find that helpful, and really would love your feedback and love your ideas on different ways to make it better. It's also not just in one language. It's literally available in a dozen plus languages, and it's individualized to that country's currency as well. And then when you're in, you also have a particular view for a teacher view. So that's something that's very important to remember as well. Is there can see this is the different languages and the different currencies, but you could also have a teacher view, and that teacher view is very helpful, because then if you're in a teaching capacity, you're able to open it up and so forth. So, but yeah, I think that covers all of it. Thank you so much.